Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Whitton and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Well, hello. Good morning, everyone. Hopefully you can hear me all right. Good to see a few of you on right now. Welcome to Wealth Coffee Chats this morning. Let me know in the chat if you can hear me. I think everything's rolling pretty well. But a quick hello to the early birds. Morning, Kevin. How are you, mate? Good to see you. A few of the others are there now. But while things are warming up and getting going, let's do the quick intros while we're waiting for the rest of you to jump on and get cracking this morning. Jason Whitton's my name. Most of you know that, though. But if you're new, fantastic to have you here. Thanks for joining. If you're new, give us a shout out in the chat. Say hello. Let us know where you're dialing in from. Where are you around this country today? Got a few of the regulars dialed in already. Luke, good morning to you. Jeff. Yeah, mate. Looking forward to it, buddy. Looking forward to it. We've got our summit on. Bit of a get-together, bit of a social, bit of learning, bit of connecting, bit of fun up on the Gold Coast from Friday, Saturday and Sunday. So look forward to that, Jeff, for sure, mate. Absolutely. Good to have you here, folks. We get together each weekday around about 8:10, talk about what's going on in the world of property investing. There's a fair few things happening out there, but at the moment there's a few ning-nongs in the world of the number one menace, our politicians. But I thought we might dive into some things, sorting out some facts from fear, folks. At the end of the day, you and I as property investors, we need to make decisions based on some good information, some good data, and some understanding of what we believe the future might hold based on some information, some stats, some charts, some conversations. Try and navigate the best we can. That's what this Wealth Coffee Chat's all about. You can't leave it too long. You can't listen to the politicians. You can't listen to the media. And certainly, unfortunately, it's very difficult to listen to those who might call themselves, advisors when it comes to this world of property investing. Those who like to advise you about property investing, accountants, financial planners, mortgage brokers, to say the least, often aren't property investors themselves. So anyway, that's not what today's about. Today's about a conversation about is or will be owning a house and a home. A house be unaffordable for you as an investor and maybe even for owner-occupiers in the future. The stats are showing that might be the case, folks. And for you and me, I think, this next little bit in the market is going to be pretty interesting times and rides. Morning, Stephen. Great to have you here, mate. Thanks for joining. Fabulous to have you along. Well, let's have a bit of a conversation this morning about what that might look like and into the future. Is the ownership of a home, a house as an investment or a home, on the radar for you as an investor? And is it going to be attainable? And what do we need to do about it? Some good information come out. We, Sam and myself, always have a bit of a look at different providers of data around Australia. And this is from the Oxford research team, Oxford Economics. We like them. But let's have a bit of a look at what's going on in the world of property ownership and property investing, and what we might be able to use this data and information for when we look at deciding what we might do into the future as an investor as we go along. But listen, there's a pretty interesting bit about the number of households and who owns them with or without a mortgage from 2021 to 2001. And the difference is a small amount, but slowly going down over time. The idea that our households are made up in an interesting mix. 1 in 5 live in an attached dwelling. What does that mean? So that's a house. An attached dwelling is a house. However, 50% or 2.5 out of 5 who rent live in an apartment, folks, or an attached dwelling. Now, an attached dwelling might be in a townhouse or an apartment or a villa, something that's attached as we go. But think about what that might mean for the future as well as property investors. Morning, Brad. Good to see you. Sonia. Morning. Great to have you on this morning as well. So, as investors, tell me, folks, in the chat, why would, half of the renters be living in a unit? Tell me in the chat, what do you guys think? Give me a thought and opinion there when you think about, all right, as we invest, what happens? What goes on? Morning, Cole. Good to see you. I think it's driven predominantly by affordability factors, but let's have a bit of a look at that as we go along and have a look at the data in here as we have a bit of a look. Now, the home ownership, which is owning a house, forecasted to go down pretty significantly over this period of time. Why is that so? Depends on what happens with the interest rate, but it's the cost of ownership. Not only has the cost of lending or borrowing gone up, lending gone up, but also the cost of construction has gone up significantly. Construction has gone up 30-odd% to buy and build a house, and lending, from 4 or 5 years ago is up a fair bit as well, around about 25 to 30% on medium-term averages, the cost of money when it comes to this sort of stuff. So, the forecast of home ownership for the general population trending downwards, folks. And, what is that going to mean for us as property investors as we go into the future? Now, an attached house or an attached dwelling. For you and I, some of our decisions are based on our borrowing power and our ability to service as we go as a property investor. We've got a certain budget, and what can you afford? Now, this is an interesting one as we go along. I've called this the proximity of profit. Now, it's never perfect when it comes to closer, but let's call this closer to infrastructure that you want to be, and let's call this this is the CBD, right? Now, if you want to get close to the CBD, and let's say you've got a $750,000 budget, is there and let's call within a 5K radius of the CBD. Let's call that 5K radius. Tell me in the chat, folks, is there a city in Australia, a capital city in Australia, and this is probably one of our headwinds as a country. Is there a capital city in Australia that you can buy a house within 5 kilometers of the CBD? Give me a shout out in the chat for 750. 750. Tell me, is there a city? And if you think about this, if we put the 4 big cities, you go, let's go Brisbane, let's go Perth, let's go Sydney, and let's go Melbourne. All right. No, it's not, is there, Cole? Like, you're looking at a 1-bedroom in Collingwood. Exactly, Luke, right? So that's what I was and into the future, depending on your needs or desires or wants and how you build your portfolio, your property portfolio, folks. If you want to be closer to infrastructure, certain types of infrastructure, certain types of amenity that are going to drive value in your portfolio, you want to be close to that infrastructure. Hobart, okay. I haven't had to look in Hobart for a long time, but 750 in Hobart. I still don't understand what drives Hobart, but it's certainly an interesting place. Oh, beautiful place to go visit. So the infrastructure or the amenity that you want, where is that, right? And so there is an exchange as we build our portfolio. I'm talking about sort of attached dwellings and housing dwellings, right? If we want to be closer to the CBD, you're dead right. If for 750, you can get a unit in these 3 places, a unit. You can get a unit in Sydney within 5K, but I think it'll be like a bed sit or a 1-bedder, where, Melbourne, Perth, and Brisbane, you could probably get a 2-bed or thereabouts. Certainly. Anyway, the point is, the conversation is, as we look at what type of dwellings that are going to be out there, and if we want to, as an investor, be closer to infrastructure, what's going to happen? What will we choose for building our portfolio as we go along? Well, the only thing really at the end of the day can keep up with demand when it comes to supplying real estate, folks, is going to be the attached dwelling market. The attached dwelling market. Now, here's a conundrum. Conundrum? Here's a conundrum. Tell me. Now, the government says, all right, we need a million new properties. Million new, right? Come on. We need a million new dwellings because we've had population growth, we've had construction issues, et cetera, et cetera. And I do not believe that the government and or our system of construction in Australia will deliver a million new properties. Not going to happen. Not going to happen. You guys know my opinion on this one, but let's just entertain this for a moment. Let's just say right now that the stars aligned. There was enough money, there was enough buyers, the lenders were confident, and we had enough people to build the damn things. Now, there's nowhere near any of that lined up anywhere, but let's just say right now that we could get that underway. What's the conundrum right now, folks? And I'm trying to ask a question without giving away the answer. What is the cost of a house and what's the cost of an apartment right now? Now, let's just do this. This is an average, and some of you might not know what I'm asking here or what I'm talking about. But let's say the average cost of average end sale price of a nice 2-bedroom unit and the average end sale price of a nice regular 4-bedroom house. Just bog standard. Does anyone know that? Let me know in the chat, because here's the conundrum, here's the problem, here's the issue right now, that when it comes to construction, right, a 4-bedroom house, a 4-bed. Actually, let's do this because it's pretty interesting. I'll grab up. I might not have time today, but let's see if I can do it. I should have grabbed that before. If you go to BMT, and let's do a construction cost calculator. Let me share that with you guys on the screen. Yeah, I tell you what, it's you'll be surprised, not surprised, but probably horrified, to be honest. The cost of constructing a unit is significant, unfortunately, when it comes to, and units were meant to be a less expensive alternative, right? They were meant to be a less expensive alternative, and unfortunately, that's not the case of recent times when it comes to this stuff. Now, if you go to BMT construction cost calculator, they do some good stuff, and let's just go here. Let's go a 4-bedroom brick veneer home, single level design, etc., etc. Whatever city, it doesn't particularly matter too much. Medium quality, the average sort of size is about 180. Look at that, folks. Canal. Excuse the French. Crikey, right? I mean, this stuff's ludicrous, folks. Let's go to Melbourne. Let's see if it's any different. Nah, not much different. Sydney, calculate that. Look at that. Look at that. Just a 4-bedroom bog standard house, right? Yep, 720 for a median house, right? Now, this is ludicrous. This is ludicrous, right? Because that number, folks, that number used to be around 280 to 350, right? And have a look at that. That's lunacy, right? Now, land everywhere is around about the same price. You're not getting much different from land. Now, let's go here and go at, let's go and have a look at the way, here we go. 4 to 8 level unit complex, including construction and yada, yada, yada. All right. They haven't got a high rise in here, but, let's have a look at, 75 square meters. Have a look at what that does. Check out that. To build a 75 square meter, right? And if you do per square meter, right? 257. Now you add the extra construction costs on for the apartment and the rest of the building. The end pricing with this stuff is coming in, folks. The end pricing is coming in at around about the same. I'm on the wrong screen. Here we go. So it's going to cost a lot to build a house. And it's going to cost about the same per square meter to build a 2-bed apartment. The end pricing is going to be around about the same. Right now, a 4-bed house or a 2-bed apartment, that's the end price. And that's kind of, if you're getting a 4-bed house for $750, right now, probably Melbourne's got some good quality $750 houses, or, maybe even late sixes, a little bit in Brisbane, maybe a little bit in Adelaide and Perth, in a reasonable distance from the city. So will it happen? Will this supply come online, completions by type in Australia? I don't think so. I think this is a little bit keen, because the challenge is buyers, especially investors, can't and won't buy those things off the plan, which is interesting. So will that supply come to market? I don't know. Now, there was a couple of things in here. I've rabbited on a little bit that I was going to show. Number of renters. Here we go. Over the next 12 years, over the next 12 years, renter households are forecast to grow, right, to 26%. Okay, that's pretty significant when it comes to, the number of renters. And, look at this. Over time, that's a pretty big increase for you and I as property investors. And into the future, that's going to be the need, right? That's going to be the need. Are we going to be on the right side of this demand as we go? And owner occupiers will grow a little bit as well. But, for you and I as property investors, what does it all mean? Well, that's the big question when it comes to your portfolio. How are you putting it together into the future? Probably the big takeaway for me today is into the future, within the next 10 years, the median house price is going to be over $1 million. That's going to be for a house. Okay. And maybe even sooner. In some states right now that's the case, it's already over $1 million, right? Now, wherever there's good quality houses in good locations for under $1 million, that sort of 600 to $1 million, that's going to be the sweet spot for value in the short term if you've got good locations. So big tick in the box there for houses. But, is it going to be unaffordable for most of the market soon in that sort of space? The answer is yes. And for you and I as property investors, we don't want to let that what do they say? Let that bull out, or let that one bolt, or something like that. Anyway, rabbiting on now, Jason. Anyway, folks, some good info, some good data there about the future. And it's been interesting to look at these charts. All the forecasts are showing increases in a positive way for you as a property investor. Not so great if you're on the other side of it as owner occupier. Not necessarily an owner occupier, as a renter. If you're looking to break into the property market for yourself, interest rates will help as they reduce a little bit, maybe later this year. Probably not likely this year, but maybe early to mid next year. And that market's going to continue to march on because the government has royally clusterfucked it up when it comes to our supply chains. You've heard me say that many a times. But anyway, there you go, folks. Wealth Coffee Chat done and dusted for today. I'm going to be checking out over the next few days. A few of the team will be checking in and doing the Wealth Coffee Chats. We've got 3 events. We've got our on-ramp for business owners. We've got our exit plan for investors and business owners. And we've got our property summit, all from Thursday, Friday, Saturday, Sunday in the Gold Coast coming up. So I'll be at that live for that event. So you won't see me on the Wealth Coffee Chats over the next few days. But the team will be here, so join them. But until then, folks, great to see you. Good to hang out. That's it from me. Bye for now. Watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.